Here's the big fund under our scanner this week. A fund you may want to keep an eye out on because it's got a track record that's been pretty consistent. And it goes by the name of UTI Mastershare Fund. This open-ended diversified equity fund launched way back in October 1986. Over the last 1 year, UTI Mastershare has yielded 37.3% as compared to 58.17% given by its benchmark, the BSE Sensex. UTI Mastershare has a track record of consistent dividend distribution for the last 20 years, that's since its launch. In addition, the scheme has also rewarded its investors with 3 bonuses and 2 rights issues during this period. The fund manager maintains that dividends have not been missed even once during the bear phases of the market. The scheme is trusted by over 5 lakh investors and has a fund size of 1900 crore rupees. But only the numbers will give you a better perspective. If you invested 1,000 rupees in this fund, you will have 5,189 rupees today. But should this be the next one that you add to your portfolio? We have the answer.
But then the UTI Mastershare Fund, it has outdone the indices over the years, but has also underperformed its category marginally. What's your take on this fund?
This is India's oldest equity fund, and investors have held it. It has an unusual, track record of not skipping dividend any year. So old-timers, those investors are very loyal. This is a fairly static portfolio. And I would say that is how the fund is. It is a very conservatively managed fund, and it has done well. It has been able to beat the benchmark. Don't expect anything substantial from this fund. It is a conservative fund. It will provide you return with stability from equity. It will give you annual dividend the way it has done.
Well, I'm going to go back to the history of this fund. It was ranked 55 and 62 in the 2 years prior to this one. And last year, its ranking fell to 155 in the equity diversified category. Now, what are your expectations from this fund? Do you expect it to come back to the top, or you expect it to flounder in the middle for the rest of its life?
I expect this fund to be in the middle only. And that is the deal. In fact, this is a fund which is not expected to deliver, and it does not assume any such risk. It is heavily focused on downside, and it is not something which is expected to create alpha.
Well, if it's not expected to create alpha, and if I'm looking for an equity diversified fund, is the UTI Mastershare the fund for me, or are there better options out there for an investor who possibly isn't looking to take too many risks?
If you don't want to be in a top performing fund and you want a fund which goes which falls less in a falling market, this is a fund for you. But if you're looking, superlative return from equity, which most investors tend to expect, and they should, then this is not a fund for you.
I don't look for any superlative returns from the UTI Mastershare Fund. Finally, they're going to wrap it up. Good, bad, average. What's your take on this fund?
I would say it's proving to be a reasonably average fund for a while.
All right, so the UTI Mastershare Fund is an average fund on Investors Guide. Remember, Dhirendra said it will give you steady returns, but don't expect anything spectacular from this fund. It's going to stay in the middle of the equity diversified fund category. It's not going to top that category anytime in the near future.